Hey everyone, welcome back to Corporate Decoder. Today BUI just filed a prospectus supplement, and I am seeing some interesting details about their upcoming share offering that you should know. Quick note, this is not financial advice, just my take on public filings for educational purposes. They are looking to sell a lot of new shares, and understanding how that might impact existing shareholders is key here. So what we have here is a filing from BlackRock Utilities, Infrastructure and Power Opportunities Trust, ticker symbol B. This document, this prospectus supplement, is basically them telling the world they are planning to sell more of their company's shares. Think of it like a company printing more stock certificates to sell to new investors in order to raise more money for its operations. The main point of this filing is to lay out the details of this upcoming sale. They are offering up to 3801642 shares of their common stock. As of the date of this filing, the company's stock was trading around $28.68 per share. Now, who are they and what do they do? The BlackRock Utilities, Infrastructure and Power Opportunities Trust is a type of company called a closed-end management investment company. In simpler terms, it is a fund that pools money from investors to buy and manage a portfolio of assets, specifically focusing on utilities and infrastructure. Their goal is to provide investors with total returns, which means both income and a potential increase in the value of their investment over time. Their shares are traded on the New York Stock Exchange under the symbol BUI. The company that manages this trust is BlackRock Advisors, LLC, and they have an affiliate, BlackRock International Limited, acting as a sub-advisor. These advisors are responsible for making the investment decisions for the trust. They get paid a fee for this, and we will dig into those fees in a bit. Let's talk about what this offering means for your wallet, or potentially the company's wallet. This section, the summary of trust expenses, breaks down the costs associated with investing in BUI shares. First, there is the sales load, which is essentially a commission paid when shares are sold. For this offering, it is set at 1.00% of the offering price. If you buy shares, this is a direct cost to you. Then there are the offering expenses borne by the trust. This refers to the cost the company itself has to pay to get this offering done. For this particular sale of shares, these initial offering costs are estimated to be around $116,155. This covers things like legal fees, filing fees with the Securities and Exchange Commission, and printing costs for the prospectus documents. This 1.00% sales load is significant. If all those 3,801,642 shares are sold at that $28.68 price, that is a commission of over $1 million, a bit more than about $1,090,311 to be exact. A chunk of that, up to 0.80%, goes to a sub-placement agent, which is UBS Securities LIC in this case. So a portion of the money you pay for these shares doesn't actually go to the company for its investments. It goes to the people facilitating the sale. Now let's look at the ongoing costs. The company's investment advisor, BlackRock Advisors LLC, charges a management fee. This fee is set at a maximum of 1.00% of the average daily value of the trust's net assets. This is a recurring expense for the trust, meaning it impacts the fund's performance year after year. However, there is an interesting point here. There is a fee waiver agreement in place until the 30th of June 2028. This means the advisor has agreed to waive some or all of the management fees under certain conditions. Specifically, they will waive fees on assets invested in other funds managed by BlackRock or its affiliates, and also waive fees equivalent to what the trust pays indirectly through investments in money market funds managed by them. This is a move to make the overall expense ratio look more attractive, at least temporarily. Aside from management fees, there are other expenses which for the current fiscal year are estimated to be around 0.08% of the net assets. So the total annual expenses before any waivers come out to about 1.08%, after the fee waivers which are estimated at 0.01%. The net total annual expenses are 1.07%. This is a critical number for investors because these expenses directly eat into the returns you get from your investment. So why are they selling all these shares and what will they do with the money? This section, use of proceeds, tells us just that. The company anticipates investing all the net proceeds from this offering within about 3 months of receiving them. They plan to use this money to invest in accordance with their investment objectives and policies, which generally means buying more utility and infrastructure assets. However, they also offer a caveat. This investment period could extend up to 6 months if suitable investment opportunities are not immediately available or due to market conditions like volatility and lack of liquidity. Pending investment, the proceeds will be held in short-term high. Quality investments, there is also a note that some of this money might be used to pay distributions, which could be a return of capital. A return of capital means they are giving back a portion of your original investment, which can reduce your cost basis and potentially lead to higher capital gains taxes when you eventually sell your shares. Let's look at the company's financial structure, its capitalization. This table shows us the shares outstanding and the value of the company's equity. As of the 31st of December 2025, they had about 24 million shares outstanding. After adjusting for a rights offering that recently expired, that number increased to over 26.5 million shares. The crucial part here is the pro forma adjusted capitalization. This table assumes this new offering of 3801642 shares will be sold at the $28.68 price. If that happens, the total number of common shares outstanding would jump to over 30.3 million. This increase in shares, this dilution, means that each existing share will represent a smaller piece of the company. The paid-in capital also sees a significant increase, reflecting the money raised from this new offering. The net assets are projected to rise to over $705 million. It is important for investors to understand how the stock has traded historically. This table shows the price range of BUI shares over the past few quarters, along with the net asset value or NAV, which is the actual value of the company's underlying assets per share. What we see here is that BUI shares have traded at both premiums and discounts to their NAV. For example, in the quarter ending the 30th of June 2026, the market price was trading at a discount to NAV, but on the 25th of June 2026, it appears the stock was trading at a premium of about 2.47% to its NAV. This fluctuation is typical for closed-end funds. Investors need to be aware that the market price can move independently of the actual value of the assets held by the trust. This is interesting. On the 25th of June 2026, the net asset value was $27.99, but the market price was $28.68. This means investors were willing to pay a little more than the actual underlying value of the assets. This premium suggests investor confidence or demand for the stock at that moment. This section details how exactly they plan to sell these new shares. They are working with a distributor, BlackRock Investments LLC, and a sub-placement agent, UBS Securities LLC. The distributor will instruct the sub-placement agent on how many shares to sell each day, essentially trying to execute sales in the market. They have a rule here though, they will not sell shares below a certain price, which is the net asset value per share plus the commission. This is to prevent selling the shares at a discount to their intrinsic value, which is often restricted by regulations. The company and the distributor have the final say on which days sales are authorized and in what amounts. This gives them a lot of control over how quickly and at what price these new shares are issued. Again, this reiterates that the distributor gets their 1.00% commission and the sub-placement agent gets up to 0.80% out of that. There is no guarantee that all the shares will be sold or that they'll be sold at the price mentioned. Market conditions will play a big role. Now, looking at these numbers and the plan here, what is my take? The BlackRock Utilities Infrastructure and Power Opportunities Trust is looking to raise a significant amount of capital through this share offering. The fact that they are offering over 3.8 million shares at a price point around $28.68 could mean they see attractive investment opportunities in the utility and infrastructure space, which aligns with their investment strategy. The fee waiver is a nice short-term perk for investors, but it is important to remember it is temporary, expiring in July 2028. Investors should be prepared for management fees to kick back in at their full rate after that. The key risk to watch is how this dilution impacts existing shareholders, as more shares are issued. Each existing share owns a smaller piece of the company and its assets. While they state they won't sell below net asset value plus commission, the market price can still fluctuate, and whether this offering provides a net benefit to the trust will depend on how effectively they deploy the raised capital. The historical premium and discount to NAV shows that the market price of BUI can be quite volatile. Investors should understand that the price they see on their trading screen isn't always a perfect reflection of the underlying value of the trust's holdings. My biggest concern is ensuring that the capital raised is invested wisely and generates returns that justify the dilution and the associated costs of this offering. The ability to find and execute on these investments within the stated timeframes is crucial for the trust's success. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.